Welcome to today's episode of the Deep Dive Credit Podcast, presented by Elite Credit Solutions. We are your trusted partner in affordable credit repair, proudly based in Tampa, Florida, and dedicated to serving clients across the entire United States. Join us as we explore the intricacies of credit management, share expert insights, and empower you with the knowledge you need to achieve your financial goals. Get ready for an enlightening journey into the world of credit. Let's dive in.
Everybody, for another deep dive. This time, we are going to be tackling the world of loans.
Okay.
More specifically, how to spot a lender that might not exactly be on the up and up.
All right.
So to help us with this, we are going to be using a great article from Experian.
Oh, yeah. Experian for sure.
You know Experian, right?
Yeah. They're one of the big three credit reporting agencies.
Yeah, so their insights on this are going to be really, really valuable.
Yeah. Definitely worth paying attention to.
Exactly. And so that's what makes this deep dive so important.
For sure.
We're going to be going over all these kind of like subtle tricks and traps that some of these lenders use so you can borrow confidently.
Oh, yeah. It's like having x-ray vision into these loan offers.
Yeah. Okay. So Experian highlights 8 major red flags.
8.
And the first one might actually surprise you.
Okay.
It's no credit check loans.
Oh.
We've all seen them, right?
Yeah.
Like plastered all over the internet and stuff. They're always promising like easy approval, no matter what your credit history is. And it sounds pretty tempting, right? Especially if you need cash quickly.
Oh, for sure. I mean, when you're in a pinch, who wouldn't want easy approval?
Exactly.
But here's the thing. You got to remember, legitimate lenders use credit checks for a reason.
Okay.
It helps them assess risk.
Right.
And determine the appropriate interest rates.
That makes sense.
Like it protects both the borrower and the lender.
Uh-huh.
A lender offering no credit check loans, well, they might not be as invested in responsible lending practices, let's say.
So they're just like, we don't care if you can pay us back, just sign here.
What? I mean, that's a little bit of an oversimplification.
Okay.
But you're not wrong.
Okay.
It highlights the potential danger here.
Yeah.
These types of loans often come with extremely high interest rates and fees.
Oh, wow.
That are designed to trap borrowers in a cycle of debt.
Oh, geez.
I mean, think of payday loans, for example.
Oh, yeah.
Classic example.
Yeah, that makes a lot of sense.
Yeah, if they're not checking your credit, they're essentially betting that you're going to struggle to repay. And that's how they make their money.
Right. So it's almost like they're playing with loaded dice a little bit.
Pretty much. And that brings us to another tactic to watch out for.
Okay.
High-pressure sales tactics.
Oh, yeah.
Have you ever felt pressured to sign a contract without fully understanding the terms?
Oh, absolutely. Like 100%.
Yeah.
It's like those timeshare presentations where they like promise you the world,
Right, exactly.
But only if you sign like right here, right now.
It's the same concept with loans.
Yeah.
These lenders try to create a sense of urgency
Mm-hmm.
with limited time offers.
Mm-hmm.
They say they have limited inventory.
Right.
And they just push you to make a quick decision without really thinking it through.
Yeah. So how can we avoid falling for this trap? Because like you said, it's easy to get caught up in the moment, right?
Oh, yeah, absolutely. Emotions run high, especially when you need money.
Right.
First and foremost, never, ever feel pressured to sign anything on the spot.
Okay.
Take your time. Read the entire loan agreement. Ask questions. A reputable lender will be happy to answer your questions and give you the time you need to make an informed decision.
It's your money. You deserve to know what you're getting into.
100%. And that actually leads us to another red flag.
Okay, what's that?
The classic bait and switch.
Oh, no, I hate that one.
Have you ever encountered this? Like with car loans or mortgages, maybe?
Yeah, for sure.
Yeah. Unfortunately, it's quite common you see an ad with a fantastic interest rate.
Uh-huh.
Or a super low monthly payment. And then when you dig a little deeper,
Right.
it turns out that offer is only for a specific type of loan, or it requires meeting certain conditions that weren't initially disclosed.
Oh, it's so frustrating.
Isn't it, though? It's like going to a restaurant and ordering a steak
Yes.
and then finding out they only have the veggie burger left.
And like a really bad veggie burger.
Yeah, exactly. A disappointing veggie burger.
Oh, yeah.
That's why it's so important to get all the details in writing.
Okay.
Before you get your hopes up, always ask for a complete breakdown of all costs, including interest rates, fees, and any conditions attached to those special offers.
So that kind of leads us into like costs in general, right?
Yeah,
And another red flag is when interest rates just seem way too good to be true.
Oh, yeah. You got to be careful with those.
How can we avoid those like deceptively low introductory rates?
Yeah, those are tricky.
Yeah, or those like inflated prices that mask exorbitant interest rates.
Right. Well, the key here is understanding the annual percentage rate,
Okay.
or APR.
Uh-huh.
A lot of people make the mistake of focusing solely on the monthly payment,
Right.
which can be manipulated to make a loan seem more affordable than it really is.
Right. It's like those buy now, pay later schemes.
Exactly.
They seem super convenient at first, but then you end up paying like a ton in interest.
A ton. Yeah, the APR gives you a much clearer picture of the total cost of the loan, including all fees and interest.
Oh.
It allows you to compare different loan offers on an equal footing.
So even if two loans have the same interest rate, their APRs could be different.
Exactly, because the APR factors in those fees, so you can see which loan is actually more affordable in the long run.
So it's not just about the shiny surface.
Nope, it's about the whole picture.
The whole picture.
Yeah, and speaking of costs, let's talk about another sneaky way lenders can increase those costs.
Uh-oh, what's that?
Hidden fees.
Ugh, I hate those.
Right. You think you've landed this great deal,
Yeah.
and then bam, you get hit with a bunch of fees that weren't really clear up front.
Right.
And all of a sudden, that amazing loan is way more expensive than you thought.
It's like finding out that your free checked bag on a flight actually costs $50.
Yes, exactly.
Yeah.
Those unexpected charges add up.
Yeah, they really do.
Some common ones to watch out for are application fees, origination fees, late payment fees, even prepayment penalties.
Wait, they charge you for paying off your loan early.
Yeah, believe it or not, some lenders still include that in their agreements.
Oh, wow. That seems counterintuitive.
It might seem that way, but lenders make money from the interest they collect.
Oh, right.
So if you pay it off early, they lose out on potential earnings.
Yeah, that makes sense.
That's why it's so crucial to read the entire loan agreement.
The whole thing.
Yeah, not just the interest rate and the monthly payment.
Okay, so what's the best way to avoid these hidden fees?
Transparency is key. A trustworthy lender will be upfront about all associated costs.
Okay.
Don't hesitate to ask about every single possible fee,
Okay.
from application fees to late payment charges. And if they're reluctant to give you that info, or they try to brush off your questions,
Yeah.
that's a major red flag.
You have the right to know.
Exactly. And that brings us to another red flag, actually.
Okay, what is it?
Lack of transparency from the lender.
Oh, okay.
If a lender is evasive about their pricing, interest rates, fee structure, or repayment terms, that's a huge warning sign.
Okay.
They should be upfront about all the details.
right.
And happy to answer any questions you have.
Yeah, it's your money.
Exactly.
You deserve to know what you're signing up for.
Absolutely. And if you feel like they're keeping you in the dark,
Yeah.
trust your gut and walk away.
Okay.
There are plenty of other lenders out there who will be happy to treat you with respect and transparency.
Awesome. And speaking of trust, let's talk about broken promises.
Oh, yeah, those are never fun.
What happens in those situations where a lender verbally agrees to something, but then it doesn't show up in the final loan agreement?
Yeah, it's a classic scenario.
Yeah.
Unfortunately, you might negotiate a lower interest rate,
Right.
or maybe you get them to waive a fee,
Uh-huh.
but then when you review the final loan agreement, poof, those promises have disappeared.
Ugh. It's like magic, but not the good kind.
Not the good kind at all. That's why it's so important to carefully review that final agreement,
whole thing
everything before you sign
before you sign.
anything.
Yeah.
And finally, we come to a red flag that's not just ethically questionable, but also straight up illegal.
Uh-oh.
A lender encouraging you to lie or omit information on your loan application.
Oh, wow.
This is where things get serious. Even if they suggest something small like slightly inflating your income,
Right.
don't do it. Never falsify information on your loan application.
So even if they say like, oh, everyone does it, it's still a major red flag.
Major red flag. It can have severe consequences both legally and financially.
Okay.
You could face legal action for fraud, and you could end up with a loan you just can't afford,
Right.
and that leads to a whole cascade of problems.
Yeah. It's just not worth the risk.
Not at all. A legitimate lender wants to work with you honestly and responsibly.
Right.
They should help you find a loan that fits your budget and your needs,
Yeah,
and not something that could hurt you in the long run.
exactly.
It's about a partnership.
A partnership.
Yeah, working together.
I like that.
Yeah. And that's really the foundation of a healthy borrower-lender relationship.
Awesome. All right, well, this is a good stopping point for part 1.
Okay, sounds good.
So we'll pick up in part 2 with some tips on how to research potential lenders.
All right. Looking forward to it.
Awesome. Thanks for listening, everybody. We'll be right back.
See ya soon. It's a relief to know all those red flags exist. It's like
Yeah.
having a cheat sheet for when you're looking at loans.
Exactly. Knowledge is power, right? So, okay, let's say you've made it past all those red flags
Okay.
and you're ready to start researching some lenders.
Yeah,
Where do you even begin?
that's a great question.
How can you be sure that you're dealing with somebody who's like actually reputable and trustworthy?
Yeah, for sure. It can be super overwhelming.
Yeah,
There are so many options out there.
there are.
A good starting point, I think, is to check online reviews.
Okay.
Sites like Trustpilot or Google Reviews.
Right.
They can give you a sense of other borrowers' experiences.
It's like checking Yelp before you try a new restaurant.
Exactly. You want to see what other people are saying.
Right.
Look for patterns in the reviews.
Okay.
Are people consistently praising their customer service,
Yeah.
their transparency, their fair practices?
Right.
Or are there a lot of complaints about hidden fees, misleading terms, or pushy salespeople?
Yeah, those reviews can be really telling.
They really can. And don't just rely on one platform.
Okay.
Check multiple review sites to get a broader perspective.
That makes sense. What about those like official ratings?
Yeah.
From organizations like the Better Business Bureau?
Oh, yeah, the BBB?
Are those worth checking out?
Absolutely. The BBB is a great resource for evaluating businesses,
Okay.
including lenders. They track complaints and provide ratings based on things like transparency, responsiveness, and ethical business practices.
So a high BBB rating generally means that a lender has a good track record.
Yeah, you can usually assume they're treating their customers fairly.
Okay.
Of course, it's not foolproof,
Right.
but it's an added layer of assurance.
Another layer, what about checking with regulatory agencies?
Oh, yeah, that's a good idea, too.
Because I know some industries have specific agencies that oversee their operations.
Right.
Does that apply to lenders?
Yeah. Definitely, depending on the type of loan, there might be specific regulatory agencies at the state or federal level
Okay.
that oversee those lenders. So, for example, mortgage lenders
Right.
are regulated by agencies like the Consumer Financial Protection Bureau.
So it's like checking if they have a license to operate.
Yeah, that's a good way to think about it.
Yeah.
You want to make sure they're following the rules.
Right. The rules and regulations.
Yeah, that are designed to protect borrowers.
Okay, so we've got online reviews, BBB ratings, and checking with those regulatory agencies.
Uh-huh.
Any other tips for researching lenders?
Don't be shy about asking the lender for references.
Oh.
A reputable lender should be more than happy
Yeah.
to provide contact info for previous clients
Okay.
who can vouch for their services.
So it's like a personal recommendation.
Exactly. And those conversations can give you valuable insights
Right?
that you might not find in online reviews.
Okay, this is all really great advice. It sounds like it takes a bit of detective work.
It does a little bit.
But it's worth it, right, to avoid ending up with a lender you can't trust.
Oh, 100%. And remember, we live in the age of information.
We do.
Websites like Experian offer tons of resources
Right.
on credit scores, credit reports, managing finances, and avoiding these predatory lending practices. Use those resources.
Yeah, I love that they have all that info.
They really do. And don't forget to tap into your personal network.
Okay.
Talk to friends, family members, colleagues
Right.
who have experience with loans. They might have recommendations for lenders.
Right. Word of mouth can be so valuable.
It really can. It's like having a trusted advisor in your corner.
I like that. Okay, before we move on.
Yeah.
I want to circle back to something we talked about earlier.
Okay.
APR, I think it's worth really emphasizing just how crucial that figure is
Yeah,
when you're comparing loan offers.
for sure.
Can you just remind our listeners why they shouldn't just focus on the interest rate or the monthly payment?
Absolutely. The APR is, like I said, the most accurate representation of the total cost of a loan. It takes into account not just the interest rate,
Right.
but also all the fees and charges associated with the loan.
Right.
Things like origination fees, closing costs, any other applicable fees.
So even if two loans have the same interest rate, their APRs could be different.
Precisely. That's why it's so essential to compare APRs,
Okay.
not just interest rates when you're evaluating different offers.
Got it.
The APR gives you a complete picture of how much you'll actually be paying
Right. Over the life of the loan.
over the life of the loan. Yeah, it's like comparing the total price of 2 grocery carts.
Ooh, I like that analogy.
Oh.
Instead of just like one item.
Exactly. It's about seeing the big picture.
The big picture. All right, so now let's shift gears a little bit
Okay.
and talk about some strategies for being a savvy borrower.
Okay.
Beyond identifying red flags and researching lenders,
Uh-huh.
what are some proactive steps that someone can take
Yeah.
to make sure they're making a really smart and responsible borrowing decision?
That's a great question. It all starts with understanding your own financial situation.
Okay.
Before you even consider taking out a loan,
Yeah.
take a close look at your income, your expenses,
Yeah.
your overall budget.
It's like taking inventory of your financial pantry
Exactly.
before you go grocery shopping.
I love that. Determine how much you can realistically afford to borrow and repay each month
Right.
without totally, straining your finances.
So avoid that like impulse buy mentality.
Yes, exactly. Borrowing should be a well-thought-out decision,
Right.
not a spur-of-the-moment reaction.
Oh, okay.
Once you have a clear picture of your budget,
Right.
you can start exploring loan options
Uh-huh.
that align with your financial goals and your capacity.
That makes perfect sense.
And here's another important tip: shop around and compare offers
Okay.
from multiple lenders. Don't just settle for the first loan you come across.
Right. It's like comparing prices before you make any major purchase.
Exactly. Different lenders have different terms, interest rates, fees, and lending criteria. By shopping around, you can find the loan that best suits your needs and your financial situation.
And remember, you're not obligated to accept a loan offer
That's right.
just because you apply.
It's your decision
Okay.
if the terms aren't favorable
Yeah.
or you're just not comfortable with the lender.
Uh-huh.
Don't hesitate to walk away.
Okay.
There are plenty of other options out there.
It's empowering to remember that you have the power to choose.
You do. You have the power.
Yeah, it really is. And sometimes
Yeah.
the best loan is the one you don't take out at all.
Oh, that's such a good point. It's easy to get caught up in the excitement
Yeah.
of a new purchase, right? Like a new car or a home renovation
Uh-huh.
or that dream vacation.
Right.
But honestly, sometimes the smartest financial move is to just delay that gratification a little bit,
Uh-huh.
save it more money, or even explore other solutions that don't involve borrowing at all.
Right. So like finding creative ways to maybe cut costs,
Exactly.
like maybe downsizing your dream vacation a little, or tackling a project in stages.
Yeah, just breaking it down, making it more manageable.
Yeah, exactly.
It's all about aligning your financial decisions
Right.
with your long-term goals and values.
And speaking of long-term goals,
Yeah.
let's talk about the psychological side of borrowing,
Okay.
because it can be really emotionally charged, right?
Oh, for sure.
Especially if you're dealing with financial stress or pressure from family or friends.
Absolutely.
Yeah.
How do you navigate those emotional complexities
Yeah.
and make rational decisions?
Right.
That's a great question. I think the first thing is to recognize that it's okay
Okay.
to feel a range of emotions when you're dealing with your finances.
Uh-huh.
Don't be afraid to acknowledge those feelings,
Yeah.
whether it's anxiety or fear or even excitement.
So it's like giving yourself permission
Exactly.
to just feel those emotions.
Yeah, just sit with them for a minute.
Yeah.
Don't judge yourself for feeling that way.
Okay.
And then once you've acknowledged those feelings, you can start to address them in a healthy way.
Right.
Talk to someone you trust,
Okay.
whether it's a friend, a family member,
Uh-huh.
a financial advisor, or even a therapist.
Right. It's like having a sounding board to kind of process those emotions.
Exactly. And sometimes just talking it through can help you gain a fresh perspective
Yeah.
and make those more rational decisions.
And you're not alone. A lot of people face financial challenges.
So many people. It's more common than you think.
Right. And there are resources out there to help people.
Definitely don't hesitate to reach out to credit counseling agencies
Okay.
or nonprofit organizations that offer guidance and support.
So it's like having a support system.
Exactly. You don't have to go it alone.
Okay, awesome. So before we wrap up this deep dive,
Yeah,
is there any final advice that you'd like to share with our listeners about borrowing wisely?
sure. I think the most important takeaway here is knowledge is power.
Okay.
The more you know about loans, interest rates, fees, your own financial situation,
Right.
the better equipped you'll be to make informed decisions.
Right. That align with your goals.
Exactly. Don't be afraid to ask questions. Do your research, seek guidance from those trusted sources.
Be proactive.
Yes, be proactive. Take ownership of your financial journey.
I love that. All right. Well, this has been such an insightful deep dive
Yeah, it has.
into the world of loans and lender red flags.
For sure.
We really hope you've learned some valuable tips
Yeah.
and strategies for borrowing wisely and protecting yourself from some of those tricky tactics.
Absolutely.
And as always, we encourage you to continue learning,
Yes, keep learning.
asking questions,
Keep asking questions.
and taking control of your financial journey.
You got this.
All right. Well, thanks for joining us for another deep dive.
It's been a pleasure.
And we'll see you next time.
See you later.
Another insightful episode of the Deep Dive Credit Podcast, brought to you by Elite Credit Solutions, your go-to resource for affordable credit repair across the United States. We appreciate you joining us today, and we hope you found the information valuable and empowering. If you're ready to take control of your financial future, don't hesitate to reach out to us at 813-317-6776. Additionally, don't forget to like today's podcast, share with your friends on social media, follow us, and subscribe to our YouTube channel to stay in tune with future updates. Thank you for listening. And until next time, keep striving for excellence in your credit journey.